All right, what's going on, guys? Edward here, back with another video. Today I wanted to show you a quick little thing here on how to mark up structure. Okay, since I've been having a lot of questions my last couple of videos, so I wanted to make sure that you guys are all clear. I do have a ton of videos based on this market structure, which, by the way, I'm going to leave a playlist right here at the top of the corner, so you can guys watch it. That's basically a free course on smart money concept. If you want to take it out, take a look at that. All right, at the moment I'm just going to continue giving examples. Okay, very simple setups which you can actually learn from. Alrighty, so as we can see here, I just already marked it up. It doesn't matter what time frame it is. It could be any time frame. All right, you can spot order blocks in any time frame. All right, what matters is how you mark up the structure. Are you able to understand that? Are you bullish? Are you bearish? Is the market shifting or not? Right, that's why we need to understand properly how to mark up the structure. That way we're going to understand exactly where the change of direction is potentially happening. Okay, because it's easy to follow a trend, but how do you know when the trend is actually ending? Can you actually draw a trend line? Can you trust on an actual trend line, right? Or is it better to mark up the structure? And you will see in a minute what I mean by that. So basically in here we see that the market is pushing up. Okay, we recently had a break of a structure right here. Why is this? Why I'm marking this as a break of a structure, right? And this one is not, and this one is not. Why? Simple. When the market is pushing up or going down, whatever, it always has to take liquidity, has to induce. So let's say we have this impulse, very strong impulse right here, right? Then we have a minor correction, another impulse, and look at this sort of small move right here, right? Boom, it's taking liquidity from this low, which is the one I care about, right? Because this impulse stopped right here, minor correction, then created another high. This is not a break of a structure either. Right here, this break is not a break of a structure, all right? It's just a minor inducement, all right? The market needs to take liquidity, which is this closest low, right? Higher low. That's the liquidity taken before it broke to the upside, right? So I know that this is my confirmed boss right there. This is not a boss. Right here, this is not a boss. This is another inducement. All right? So same thing happens here. You see impulse, correction, and another impulse. Is this correction taking any liquidity? No, it's not taking any liquidity to the downside. So it instead just pushed up, right? Breaking the previous high. So this is an inducement, just a minor inducement to the upside. Now look at what happens. Price does another dip, pretty much another pullback, another correction right there. But that correction is not taking any liquidity right here. And because it's not taking any liquidity here, more price, you see the price pushes up again. This is not a break of a structure. This is just a minor inducement. The way I'm doing, or the reason why I'm marking this up, is to know where my change of character is going to be. If this is my confirmed boss, right, my confirmed break of a structure, I know for sure that if the price happened to break this low, this is where my change of character would be. That's the whole point of this thing. That's the whole point of understanding where the actual boss happened, okay? Because otherwise people will be marking this as the chart. If the price all of a sudden happened to maybe come back down and maybe break here, they will be thinking, oh yeah, this is a change of direction. This is a change of character. We're going to be looking for sales now. No, the market is technically still bullish because the actual change of direction is right here. This is not a confirmed boss right here. This is just inducement. You have to be careful with this. That's why you always fail in thinking that the market is changing the direction when you're still on an uptrend and there is no signs of reversing just yet. You know, market can maybe the market is just sweeping this liquidity, taking the first liquidity now to the downside. maybe mitigating a potential order block right there. We'll mitigate, boom, to then break to the upside. Guess what? Now this is going to be my boss. This is going to be my actual break of a structure. Why? Because it took liquidity now, because it took this inducement right here. This case, because induced right there. Right? It's very important to understand that, guys, because that's what's confusing you. Right? Let me put this as the break of a structure so you can understand. Right? That's basically it. Okay? At the moment, I don't know, of course, what's happening. So let me see, and just continue doing. Look at that. Market actually did induce. If you look at that, market did take the liquidity. Actually, it did induce right there. Right? It went a little deeper, but never mitigated the order block right here. That's going to happen as well. Okay, sometimes it's going to happen. The order blocks not all the time are going to be mitigated. Right? However, this is now a confirmed boss. This is a break of a structure. Okay, because the market took liquidity to the downside. Now, pay attention. We had said that this was my actual change of character, right? So far, this would be my change of character. But because now we have another boss, another confirmation break of a structure to the upside, guess what? The change of character now is going to be there. Okay? And we're moving. We're still bullish. The market is still bullish until it breaks the change of until it breaks this previous low. Okay? So we simply just continue watching and see what is going to happen. All of a sudden, you see sort of aggressive move, right? Now breaking right there, and apparently is causing a change of direction, apparently. All right? You see this nice break right there, right? Normally, when we see a change of character like that, what do? We wait for the market to form liquidity, right? It's clear to say that, yeah, we do have our potential order block right there as our supply zone, right? And we just simply wait for liquidity to be formed. Okay, we want to see the market actually consolidating or creating some sort of form of liquidity. In this case, I like what the market is doing right there already, because this is telling me at this point, is telling me that above these highs, right, there's stop losses. There's liquidity there. All right. Now at this point, you can feel free to now maybe place a short position. Let's say you wanted to get in there, and you stop here and your take profit. At least right now we're aiming to this low. We don't know yet where the if this is the actual final low. Let's say we don't know yet what's going to happen here. What's actually happening? You just simply wait, right? But you can definitely place your position. Market is breaking strongly to the downside now. Now look at what's happening right there. Very strong aggressive sale, right? Now with this aggressive sale, wow, it's just coming. Looks like it had a big spike. At this point, it's up to you. If you want to do this, you can now stretch it out, your target, just in case it comes back to your zone, right? This will be your target. That zone, perhaps, we're still in a 5 minutes, so this could be happening in one single day, you know? So we're definitely changing. The change of character will happen there. Is this zone going to be touched or mitigated? I don't know. I don't know if that zone is actually going to get mitigated. What I recommend you is just keep an eye during the day. If it's more than a day, of course, if you're scalping, it shouldn't be more than a day. If you're swing trading, okay, you may have to maybe hold the position for longer. But if it's just in a 5 minute and you have a sell limit order right there, don't leave it open for more than a day. It's kind of dangerous if you're on a 5 minute. Okay, if you want to take the risk, I mean, go ahead. But it's kind of dangerous. Look at that. Just look at how crazy this thing was, right? Very, very aggressive move. Something was happening here. I'm sure there was some sort of news or something. But you see, the change of character was definitely caught very nice. The market actually did a pullback, a minor correction right there, and then a break, right? So we can see that actually we have a potential, maybe a POI right here, which is a trap. This POI zone right there was basically a trap. The market went up, sweeping, taking this entire liquidity right there, mitigating the order block before the actual drop. You see? So that was a nice setup right there from this point. Now, what do we have? This aggressive sale. I also like this aggressive sale as well. So if we do have, because the market took liquidity now to the upside, this, let me see, this was, yeah, this was actually a break. This was actually a bust because this low was lower than this one. The market induced right here that high. So this is definitely a break of a structure. Look at what's happening here. This is a boss. And right here, we can mark it out like that. That's a boss. And look at the actual sweep, right? This was a liquidity taking or a sweep right there, right? This is not a change of character to the upside. Some people will be marking this up as a change of character. It would probably, what it was is just a sweep or a fake chalk. The body of the candle never crossed above or closed below this high. So this was just simply a sweep, mitigating the order block before continuation to the downside. Now, that aggressive sale is leaving a lot of imbalances behind. I really like that. And if you see this, you also have an order block, right? This aggressive sale. Where is the previous candle? This is the previous candle before the big move, okay? There are different ways of marking this order block, okay? I did explain on my previous video, actually. So right here, there's different ways. What I would do, because I don't want to ignore this sort of candle. Now, you might think that maybe I'm wrong, but I would take it all. Probably I would do something like this, cover this entire zone, all of it. I don't want to ignore this week. Normally, an order block like that, people would actually cover this, right? But because I'm entering at the 50, I'm trying to get in and catch the 50% of the order block, right? This entry, maybe I actually missed it because I normally enter at the 50%. So this entry right here, this drop, I probably miss it, most likely, right? So what I normally do, I don't want to ignore this actual block, this entire zone right there. So I will include it all, okay? And because I'm entering at the 50%, you see, I'm not going to be, if I'm entering right here, I'm not going to be entering right here and placing my stop in here, right? It's too far. What I can do, I'm still, I'm still in a 5 minute. I can go deeper. I just want to wait for the market to simply come back up, form liquidity, right? I'll just simply wait. You see, market is already mitigating the zone. Technically, okay, look at what's happening. The market is actually building up liquidity. It's already touching the actual candle, but it's building liquidity, right? Right there, that zone. We have liquidity. Ah, come on, I'm sorry. Where is it? All right, it's building up that liquidity right there. And I want to actually, what I would be doing is I would be most likely entering at the 50%, or I would be waiting for the market to simply reach my zone and maybe look for in lower time frame for a boss and a change of character, something in there that would tell me to jump in. All right, but so far this setup is also looking good. After the imbalance, we have liquidity. You can use even your Fibonacci as well. So from this high right there to this low, you see coincidentally that 50% of my order block is within my golden zone. So that's beautiful. That's making this thing more and more probable. All right, what's market doing is touching. Oof, first aggressive. You see, I like that when it's touching, all of a sudden, boom, it has an aggressive. So if you go maybe here in lower time frame, I'm sure you can actually spot something else. Let's do that. Let's go to the 1 minute and see if we can actually spot something else. Because normally you can find another entry in lower time frame, so you can take the most out of this trade. So that's what I'm going to do right now. I'm going to try to go in the 1 minute and see if we can spot some sort of break of a structure, change of character, perhaps, but some reaction. I want to see a strong reaction. What I'm seeing at this point, this I would not call this right here. I'm seeing a clean break, very aggressive. I like that, but I would not call that a change of character because there was not a boss above. Okay, this to me is just a break of a structure. The market break, very strong to the downside, right there, right? Simply that. Very strong aggressive sale. And I do see a little, but a lot of imbalance. See a little order block right there. I really like that one. And I'm on the 1 minute. I see that the market is building up liquidity, above this highs. I really like that. I can, because I know that on the 5 minute time frame, the market is already touching the 50% of my order block, right? On the 5 minute, right? Now I know that I have a strong reaction to the downside. That's what I want to see, strong reaction. So I am ready to take the chances in this one and to take the risk. So at this point, if I want to place my position there, I see the liquidity already, as I mentioned. Now I could be looking to, to hold this thing until the bottom, which is pretty much the target on the 5 minute, right? So what I'm basically trying to do here is to try to catch a sniper. Okay, I know that the market definitely changed the direction already here, and it's been moving to the downside. So I'm going to go for it. I'm definitely going to go for it. I'll just wait to see what's going to happen at this point, right? I really like this consolidation. Really like this consolidation right here because this also makes me feel more confident that the market will eventually try to sweep this liquidity as well. That makes me feel confident on going for that sell. All right, so let's see what we have at this point. Market keeps consolidating. Boom, gets to the zone, another nice reaction, starts consolidating a lot. I would be very nervous at there, to be honest. I would be very, very concerned. The market is just not dropping at all. It could eventually stop me out as part of the game. If it happens, it happens. All right, my stop loss is very tight. Starting to see some reactions now to the downside. Keeps going. Let's get it. So at that point, I should definitely be on break even. The market is now breaking the structures to the downside right here. I should be already on break even at that point. Just look at that. Beautiful. Let me just move it already. So there we go. Nice, nice right there. Entry. This would have been a 1 to 23 risk to reward. Okay. But you see where we come from, right? We come from a bullish uptrend. Of course, we're coming from a bullish uptrend right here. Bullish trend. Market shifted, showing me the change of character. Okay, very important to know where the change of character is happening. And we went from there, pretty much starting to look for sales after the change of character. So I hope it makes sense, guys. I hope this example also helps you to catch this type of trades. Okay, always looking for more confirmations. You don't necessarily have to jump in. There was an opportunity to jump in right there, right, and placing the stop here. But you see the risk to reward, it's 1 to 6. It's not bad at all, but you cannot say that 1 to 6 is better than 1 to 23, right? So that's why you can go always in lower time frame and try to spot more confirmations, like a second order block, some more reactions happening in lower time frame once it's touching your big time frame order block. Okay, I hope it makes sense. Make sure to watch these videos a couple of times if it's necessary, so you can keep up with this, because I know it's not that easy, but the more you practice, the more you use your tools like Fibonacci, correctly order blocks, understanding liquidity, all that stuff, you're going to learn. So thanks again, guys, for watching. That's pretty much it for this video. Make sure to give it a big thumbs up, subscribe if you're new on the channel. More and more content for you guys coming up like this, and I'll see you in the next one. Take it easy, guys.